Well, good morning, everyone. It's Thursday, the 24th of October, and I apologize I wasn't available yesterday. We were actually doing a film shoot at my house, but I'm back. I want to show you guys something before we get into this session. 200-day moving average. This is the overall stock market. This isn't the S&P 500. Only 51% of stocks are trading above the 200-day moving average, which means the overall market is tithering by 1.7% of being bearish. So the overall market is not as excited or as bought up momentum-wise as the S&P 500, as what we're looking at right here. So now if you look at the 20-day moving average, it's at 68%, 20% higher, or more than 20% higher, substantially more higher, almost 70%, which means in the short term, the market is getting a little bit overbought, whereas in the long term, it's just not looking that great. Let's look at this chart. So this is where it's been heading to and bouncing back. It's been bouncing at the 59th percentile, and we're at the 52nd percentile, if you will. So, and if we look a little further, let's go to 5 years. You'll notice that in the last year and a half, we've never gotten above 63 percentile. And that's been mostly due to the trade war issues and so forth. But I want to show you something interesting. Remember this number. This is not the S&P 500. This is the overall market. 51.70% of stocks are trading above the 200-day moving average. I would say that's slightly neutral, highly neutral. It's like we're sitting right at the 50-day moving average. But look at the indices. We now have almost 70% of stocks in the S&P 500 trading above the 200-day moving average. So if you look at the S&P 500, we're literally getting to really overbought levels, whereas the overall stock market is just not participating at all. And that's telling me that the S&P is grossly overvalued and remains grossly overvalued in comparison to the overall stock market. And that's a problem because everything has to rise for the stock market to continue to see continuous momentum. If you only see large caps or you only see 20 stocks rising, what do you think is going to happen when 400 stocks move down a little bit? Those 10 or 15 stocks will go along with it. And remember, the US stock market is capitalized weighted, which means the bigger stocks get more say. So when you're looking at the S&P 500 right now, you're literally looking at Apple, Amazon, Nvidia, and a handful of other stocks making this. But if you look at the broad market, if you look at the overall stock market, right here, let me go back there, you will see that we're tithering on a bearish market. If less than 50% of stocks are trading below the 200-day moving average, we're done. So I'm not happy with what I'm seeing right now. And again, if you look at the Russell 2000, which is the small caps, not tiny caps, but 2 billion asset man and 2 billion net worth for the company, thereabouts. Look at this. This is 5 years. Look at the last year. Look at this. Highs and low. And we're reaching for the highs. We're just a little bit above, a little bit away from the highs. And I believe when we reach this level right here, about the 160-ish, 159 level, we're going to back down again and go back down to the base, unless we see something from China, U.S. and China, and I'm not seeing it yet at all. Now, let's look at the economic report, because the employment reports should have just come out about a minute ago as we started doing this. And the actual number is 212,000, right within range. 214 consensus, 212. That's a very little move. The bond market is rallying above that right now. Right now, the bond market is below the 50-day moving average. Now, here's what I'm seeing. Pay attention to this. This is going to be a reality. There's about 85% of chance that'll happen. What you're going to see is the S&P 500 huff and puff, maybe go up another this much, just a little bit more. And if you're trading the SPY, let me show you how it's going to play out. We're going to go right to the peak right here, maybe break out just by a tick or two, get really overbought because all the other stocks are neutral at best and not get any follow through. Then the S&P is going to come back down to the base right around the 282 level. And while it's going down to the base, the bond market is going to rally back up above the 50-day moving average because when stocks go down, bonds go up. So Fed data, fairly stable. Nothing really to throw us off. Still near historic lows as far as jobless claims. I mean, we're like, what, at a 50-year low right now for unemployment? So things are looking really good. Now, let me talk to you about two stocks. Tesla. Tesla came out with better than expected numbers last night. The stock is up $45, like 17.78% pre-open. We're going to open like right over here in about an hour, which will take us right to the medium-term resistance level. So the key will be whether we'll be able to gain momentum from there. Now, here's what I propose. Don't buy Tesla right now. It'll rally, it'll huff, it'll puff, and then it'll come down. It'll probably, let me show you something. It'll probably huff and puff right around here, and then come back down, fill the gap, and come down to the 50-day moving average. And that would be a good time to start buying it, especially after the fact that it's been basing like this, with lows making high, lows moving higher. Lower here, it's lower here than here, and lower here than here. So the lows are getting higher, the highs are getting higher, but I wouldn't buy on this breakout. I would wait for a pullback and then move in. I'll give you guys a shout out when that happens. And another stock that came out this morning, but this one had a reversal of fortunes, was Twitter. Didn't do so hot. It's slated to open about 17% down. So Tesla's going to open about 17% up. Twitter's going to open about 17% down at right around here. And that's the support level. If you are a long-term investor, if you're looking for value, Twitter is a good buy at these levels. I don't think anything's going to happen with the company. And most importantly, Twitter has a very unique following and business model. So there's really very little competition, specific competition for Twitter. And we know how much President Trump loves Twitter. The company's not going out of business. So if we open around 30, 31, it may be a good time to start buying in if you are a longer-term investor. If you're a short-term investor, forget about it. You got to wait till it's above the 50-day line. But if you're looking for a bargain, and if you're looking for a longer-term deal, maybe 2 years, 3 years, you're going to buy at a really good price. But if you're looking to swing trade this stock, don't even think about it. You got to wait till it's above the 50-day moving average. So again, I'm just bringing it out there. So to summarize, Tesla is going to open up about 17, 18%. Twitter is going to open down about 17, 18%. One had positive numbers, one had negative numbers. Twitter is a good investment buy around the 30-ish level, not a swing trade, investment, okay? And Tesla, I would wait for the stock to move back to the 50-day moving average, which is around the 238, 240-ish level, 237 level. As far as the S&P 500, I wouldn't be buying into this rally. I think the market is going to start coming back down, and we're going to start seeing upside in the bond market. Sorry, you guys are hearing a little cat. I have a little Persian cat that's trying to get out of this room. So I believe bonds are going to start coming up. Let me see how oversold they are. Let me show you this. I love doing this in the mornings. Yeah, we're coming off oversold levels. We just bumped around the 30-ish. Looks like bonds are going to start coming up. So I would start scaling out of stocks and scaling into bonds, and I would wait and see what happens with Tesla, and I would only buy Twitter if it's a longer-term investment. I hope I was clear. I hope I was complete. If you guys like these videos, if you're getting more out of these videos than you're getting from some other services that you've paid for thousands of dollars from someone else, let me know. I want to hear from you. Support@marketgeeks.com. Like this channel and leave me some feedback. I'll answer your questions. I really will. If it's a good question, I will always answer it, and I'll do a video about it. Talk soon. Have a great rest of the week.